Vincent, we're going to take a slightly different approach today in the Lex video because you and I total disagreement. I think today's announcement that Dentsu, the Japanese advertising company buying Aegis, doesn't make any sense. You think it does? Why is that?
I do actually. I mean, I think it's a very good fit for Dentsu. Look, advertising starts small and ends very big. We're seeing this is one of the biggest deals ever in the advertising industry, and I think that this is Dentsu breaking out of Japan, buying Aegis, which is very big in Europe and the US, and it has two other things that matter. One is emerging markets business, and the other is digital, much bigger than Dentsu. I think this offers Dentsu what it's undoubtedly seeking, which is growth.
And why, as a Dentsu shareholder, wouldn't I just want to go into the market and buy Aegis shares for 20% less than the company I own's just paid for them?
Sure, you could, but I mean, I don't think that's quite how it works. And this is Dentsu bulking up here, and this is they have their shareholders behind them, and they have tons of cash to do the transactions like this, so I can see why. I can see the appeal to.
Dentsu wants the growth. It makes sense from a currency point of view relative to 5 years ago. But normally Lex would argue there's got to be some kind of synergy benefits to at least offset the premium paid. Is there any in this particular case?
There aren't, no, and that's a fair point.
Mm-hmm.
But I think that synergies only go so far. There's actually very little synergy in the advertising business anyway. Mm-hmm. It's difficult. These are people businesses, right? So unless you fire loads of people, in which case the talent is walking out the door, you need to retain all these people. There's very few sort of cost synergies in an industry like this. So I don't think that we should be looking at the synergy level really to argue this deal. I think this is more about Dentsu growing and actually taking a big chunk here.
One argument you might make is that Aegis's growth opportunities in its digital side have been undervalued by the market in the UK for some reason. Is there any sense of that?
I think that is the case across the industry, actually. I think that what you're seeing is the more and more deals that get done in the advertising space, they are done on the basis of their digital potential, either actual revenues or potential revenues. We've seen that in the last 12 months or so with a couple of other deals where it's really the digital side that drives it, and that's the bit that commands the very, very high multiples. Well above 20 times multiples for the digital space. I think that's what you're seeing here as well, and this is a big part of the rationale for this transaction.
Okay, well, shareholders agree with you. The deal is an agreed one, so we'll watch closely on how it goes. Thanks very much.